PVR, which is jumping up and bucking the trend, considering the board has now given the green signal for 350 crore rupee preferential issue to 3 investors. Let's get in some more details on this. Nitin Sood, CFO at PVR, joins in. Nitin, hi, afternoon. What's the game plan? Walk us through, what is it that you intend to do?
Yeah, so the idea essentially is that we just announced an acquisition a couple of days back.
Yes.
And we've been in touch with various investors looking at opportunities as and when they come up. So I think this funding is essentially to kind of help us fund the acquisition and help us grow organically. And the equity has been put in by Multiple's private equity fund. They have 3 different funds under which it is managed. And they're investing into the company a amount of 350 crores by the way of a preferential issue.
You're pricing the issue at $700 per share, is that right?
That's right, that's right.
But isn't that at a significant premium? Your current market price is at what? 660, 661?
Yeah, so it's roughly at a 8% premium to yesterday's closing price. That's right. So it is at a premium to the prevailing price, but prices can vary. Being a listed company, market prices vary on a day-to-day basis. I think it is a reflection of whatever the inherent value, what an investor sees in an organization. So,
what are the name of the 3 investors?
So essentially, these are 3 private equity funds, but all managed by Multiple's private equity. So these are the legal entities which will be investing, but essentially these are private equity funds run and managed by Multiple's private equity under Renuka Ramnath.
Renuka has been there with you. So can I say your original investor is committing more?
Yes, you can say that. I think which is also a big reaffirmation of the fact that she believes in the company's strategy of growth, and I think this is another stamp of reassurance which could potentially have been on company strategy.
Now, you're a profit-making company. You don't have a huge debt on your balance sheet, and some would argue that if you're acquiring, why dilute equity? Because ultimately, a minority shareholder is interested in EPS. Preferential issue ultimately will have impact on EPS. You could have gone to a bank and raised money.
No, so we are leverage. We already have existing leverage, and it is very important for us in our growth journey to ensure that we don't over-leverage ourselves. Most of the companies commit this mistake of trying to over-leverage themselves, and especially when you're growing. And I think the board felt it is very important for us to fund a transaction right, have a right capital structure, so which is a win-win for both equity shareholders as well as gives comfort to the debt investors.
Okay, Nitin, thanks much for taking time out and speaking with us today at ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.